Hello and welcome to Lipper's Fund Flows Insight Report. I'm Jeff Turnahoy. For the week ended Wednesday, November 20th, 2013, the conventional mutual funds industry saw relatively light flows activity. Let's take a look at our macro groups and see where the flows were. Starting off at the top, equity mutual funds had about $2.6 billion in inflows this week. They clearly led all other groups. Taxable bond funds had slight outflows, barely less than zero. Municipal debt funds also had about, call it $800 million in outflows. A pretty good number for them, still relatively light in the scheme of things. And money market funds had about $800 million in inflows, which is just a drop in the bucket to a $2.6 trillion asset base. Well, as I mentioned, there were light flows activity across the board, and that was reasonable given the light news this week. We saw that Janet Yellen was confirmed as the next chair of the Federal Reserve. We also saw the FOMC minutes release that indicated tapering was likely to come sooner rather than later. Both of these events seem to solidify the opinions in the market that we're on our way out of the stimulus as we know it. So nothing came as a surprise to investors, and the political news was fairly light. On the economic side, we did see some mixed news. Retail sales were up, but home sales were down. So this led to some fairly light trading across the board. Let's take a look at equity funds and see where their activity looked like. As I mentioned, the news was fairly light this week. This caused a flat market. We saw the Oakmark International and Market Field funds do very well as they continue to draw assets. They actually led through the International Multi-Cap Core as well as the long-short equity funds in the race to the top. Year-to-date, domestic equity funds have had inflows of about $80 billion, while non-domestic equity funds have inflows of about $96 billion. So overall, it's been a good year for equities. They keep chugging along. We've seen some inflows and outflows over the last several weeks, but things seem to be on a good track right now for them. The next group to take a look at is equity ETFs. They too had a fairly flat week, only about $1.3 billion in net inflows. Leading the parade was IWM, the Russell 2000, had about $655 million in net inflows. EFA, the MSCI EFA ETF had inflows about $514 million. On the bottom of the chart, though, we see QQQ and EEM with several hundred million dollars in outflows, while SPY led with about $1.5 billion in outflows. Overall, we saw most of the inflows activity concentrated in U.S. small caps as well as Japanese equities as investors take to riskier assets at this time. Next group to take a look at is taxable bond mutual funds. Again, with about, we call it $74 million in outflows this week on a net basis. That's virtually zero, probably a rounding error in terms of the size of the industry. This is their first outflow after 4 weeks of inflows, so maybe a bit of a surprise here. Loans, of course, were not a surprise as they led with about $739 million in net inflows. High yield funds came in second with about $332 million in inflows. Overall, though, most of the outflows activity was centered on those core bond products. They suffered over $600 million in outflows. Overall, not a whole lot of activity here for mutual fund investors. On the other side, we saw that fixed income ETFs had a little bit of activity this week. They had about $350 million in net outflows. Again, it's a much smaller asset base. This is their third week of outflows, so investors really don't have a lot to cheer about in the bond market these days. The iBoxx High Yield ETF, it had inflows of about $196 million. JNK was next with $101 million. So definitely where the activity was, it was focused clearly on junk bonds. The iBoxx Investment Grade had outflows, however, of about $444 million as investors tended to get into riskier assets, pull money out of the safer ones. So that's why we saw junk bonds with inflows and investment grade with outflows. This was a pattern seen across the board. Next group to take a look at is municipal debt funds. Well, nothing changed this week. For the 26th consecutive week, they had outflows. This time, we'll call it just under $800 million. they've had about over $50 billion in year-to-date outflows. So they're definitely not anywhere near climbing into the good graces of individual investors. So we expect to see more outflows in the $500 million to $1 billion range on a weekly basis, at least as far as the eye can see. It's tough to see where investors will change their minds about municipal debt funds. It did have some decent performance this week. They were up about 14 basis points, but still not enough to change anyone's opinion about jumping back in. Final group to look at is money market funds. They had net inflows of about, call it $800 million. This had two different sides to it, though. We saw institutional investors remove about a net $1.5 billion from their cash accounts, while retail investors putting some money aside this week, about $2.2 billion. So when we net it all out, we get just under $800 million in net new flows to money market funds. Well, that'll do it this week. Please join us next week, where we'll take apart the flows activity in mutual funds and ETFs, or join us online at lipperusfundflows.com. Thank you.